Stavros Tousios for M4Markets. Today we're going to have a quick look at the Kiwi and also Euro against the Aussie for different reasons, but here indeed. Now, you probably remember I'm talking about 5 wave legs all the time and corrections all the time, and that the corrections overlap. And this is exactly what we currently see. We see an overlap in this particular case over here, and we see 5 waves coming down. And recently, we have actually broken outside this ascending channel and retested the channel as an actual resistance. That suggests that there could be another leg to the downside below the previous low, where of course is going to end an actual probably correction. It could also be of course a continuation to the downside, but we'll know of course once we fall and we'll start rising again, and whether the rise to the upside is going to go above the 60.82. But for now, the idea is that we also have an actual divergence here, right? So the idea is as long as we remain outside this channel, the bias is to the downside. If we look at this leg as well, from bottom to top over here, we have come below the 50, which again confirms that the bias remains to the downside, and we'll have found also resistance at the very same level. Now, that doesn't necessarily mean we're going to go down in a straight line, but it looks like that most of the indications and price action itself, it hints at a potential revisit of that low and perhaps even low rather than anything else. Now, of course, things are going to change if we return back within this channel, okay? Because sometimes this sort of consolidating patterns, they tend to last for longer and longer. Now, when it comes to Euro-Aussie, we actually have divergences coming over here. So we have a double divergence, which is a very ideal signal that we have actually talked about in the past, right? We also had that last hidden bullish divergence to give us that last boost to the upside, right? But here's what's going on now. We are moving up in what it seems to be like an actual wedge. And wedges at terminal points, and I will explain why terminal point, because we are actually at the double top at 164.38. That is August 2021 price levels, guys. So we reached a top there. Now, it is either a case where this is going to be an ending diagonal or wedge, if you may. We are going to see an actual reversal. But there is also the case where we are going to see this diagonal receive a simple correction. And if we do manage to stay above this channel again, which of course is going to keep the trend to the upside, then we could see further continuation. Instead of an end in price action, it would be a lead in price action here. Okay. Now that channel is not the the 100% case as well. Maybe we're going to fall lower down, see a deeper correction, and still continue higher, and that could still be the leading variation rather than the ending variation. But either way, what we do know is that we are seeing very restricted price action at a 1.5 year top or something, right? We see the Fibonacci, the 61.8 Fibonacci extension being taken out as well, the double top, and multiple signals on the RSI that suggest that momentum is actually slowing down. So typically when that happens, there is two things that need to happen to the downside. One is to reach the first correction, and the second to see the second correction. Now, only if we manage to stay above that level or that level, we could continue higher faster. If we lose that low at 158, we're going to go and retest probably the channel bottom, where we will receive further clues on whether this is going, of course, to continue further lower down because the 152.54 is going to be exposed after the breakout, or whether we can see a potential respite, either further continuation to the upside.